Hershey is a stock that just hit 52-week lows. We can see the lows were right at 168. It has bounced a little bit back up to 175, but this is still a company that is really cheap, right? Actually, we can even see, at least in terms of share price, actually we can even see that it's more like 3-year lows. It wasn't around this range till late 2021, which was 3 years ago. So this is basically a 3-year low for Hershey's. So this is maybe an interesting opportunity to buy. Certainly if it's the stock you were already looking at, maybe monitoring, this is a pretty cheap entry for this specific stock. However, you should note that it is clear and obvious that this is a company that is primarily focusing on giving out returns to shareholders in the form of dividends more so than just necessarily share price. Not saying it can't increase in share price, certainly in the short term if it's relatively cheap. And we've seen from highs here, right, that it clearly has the capacity to grow, right, in terms of share price. But we're going to look at the dividend increase a little bit later, and it is clear this is a company primarily focused on returning a dividend, at least for the long term. And we can see over the last 5 years, it really hasn't even matched inflation. Inflation has been around 23%, and this is only up 19%. However, it's really basically at it, and with that 3% dividend, that's still relatively high. If we zoom out, it starts looking a little bit better. We can see over the 10-year performance, it has only gone up not even double, but it's still dramatically outpacing inflation, certainly when you go back to 2000. It's really actually done pretty well considering the area it's in. Clearly, this isn't a tech stock that has returns like tech stocks, but if you're buying this, you probably aren't necessarily expecting it to do that well. Good dividend, good diversification. Let's look a little bit at that PE. PE is right around 25, 19. So this is technically a value stock too. However, it's close enough to PE that I wouldn't necessarily peg this as value. I think it's a good dividend, excuse me, and I think it's good diversification, but I don't necessarily think it's a good value stock, right? Because generally I'm looking for returns on share price with value stocks personally. This is more of a dividend stock, right? It just is. And we can see that if we go to the dividends over here. Right, we're going to probably be a little bit lower than last year in 2024 instead of 2023, right? But we can see with the amount the dividend is increasing, right? 6%, 8%, 8%, 5%, 8%, right? I don't have to go through all of it. You guys can read. But clearly, the amount of money that's being put towards the dividend, it's a lot. It's dramatically outpacing inflation. It's clear and obvious to me that the company is trying to make the dividend the primary way to return value back to the shareholders. And probably if this trend continues, even though it's regressing a little bit this year, you're probably going to see close to that 4% range, and you're going to see not as much share growth, certainly not from like 2000 to like 2014, right? There was a good amount of share growth there. You're probably not going to see it 4x or something like that time frame. Not saying you won't make money on it. It's just primarily probably going to be from the dividend, right? However, short term, this may be a trade opportunity. I don't personally do trades. However, off 52-week lows, that sort of stuff, it could be a decent opportunity. I would advise you to find someone who does primarily trading stuff if that's what you're looking for. However, I wouldn't mind it for 3 ways, right? Diversification, cheap, and that dividend, right? So maybe you put a little bit more than you normally would because you think it's cheap, and then when it rebounds something you sell it, because the odds that this doesn't get back to 200 or something is very unlikely, right? I did that sort of thing with Apple. I do not trade, right, but I might invest a little bit more than I normally would in a company that I like just because I think it's cheap, and then when it hits a price that I think, okay, this is fairly valuable, then I sell that money, move it elsewhere. That's the most trading I'll ever do, but usually I will invest in a company that I already like, and I wouldn't mind holding it for long term if it just didn't perform well. So Schwab does not like this stock, at least in the short term. They think it's 1 year performance. They reiterated this 2 days ago. So basically, when it was even lower, they said this is not going to be a good performing stock over the next year. They have it in the bottom 10% of all stocks performing. I think that's a bit extreme. I do think this is relatively cheap. However, I do understand the fact that, maybe they think it's not going to do super well. Whatever. It may run sideways, but I like I said, I don't do 1 year performances, but I think that's a bit extreme, certainly from Schwab. But that's just me, right? They have a wide economic moat. Yep. I mean, when you have the name awareness and basically you're the number one, chalk seller, and they have other brands as well, but they definitely do just with name brand. They have a really large moat for their industry, right? 2 stars there, hold, avoid, hold, low ESG score-ish. So we're really kind of getting a lot of mixed signals, it seems like. Yeah, I mean, if we look at historical PE, this is on the low end, not the lowest, but it's relatively low. It comes off of particularly bad couple quarters. I think that's what's really dragging on the share price as well. However, it's really not super dramatic misses. And even if you were to stabilize at these levels, it really wouldn't be anything crazy, right? Difference, you're missing by what? Not even 5% there, right? Something like that just off the top of my head. However, yeah, certainly with the dividend you're getting, you can even afford to have it ride sideways for a bit. So I'm not particularly concerned. Yeah, we're on the lowish end, but not the very lowest end of PE and all that. Analysts, basically everyone's saying hold, some underperform, strong, some buy. So analysts aren't super hot on this stock. So actually some of the more fairly tame ratings I've seen in general. However, I don't really put too much stock into analysts. So basically what I'm getting is the vibes aren't super hot around this. But then again, if they were, it would be going up, not down. So I think I've already said all this, but just a quick wrap. I think Hershey is a decent, if you were looking at this for a dividend portfolio, I think this is a really good entry point. If you're looking to, I don't know, even swing trade it, at least the analysts say don't. They don't think it's super cheap, but that's just what they have to say. So anyways, I hope you guys enjoyed this video. If you enjoyed, I'd appreciate if you left a like, subscribe if you enjoy my content. I do daily stock content on this channel. Check out some other videos I do. But if you do enjoy, I'd appreciate if you left a like. YouTube really recommends my stuff out. Whenever I get a subscription, I can tell. Usually I can pin it down to, oh, yep, I got a subscription, and then I'll see a boost in views because YouTube really pushes the video out after that. So anyways, I appreciate all of you for watching. I'll catch you next time.